Welcome to Business Middle East. This week we look at the largest initial public offering of shares in the United Arab Emirates since the global financial crisis. Emaar Malls Group's share price jumped by 12% on its first day of trading, thanks to huge demand from Arab and Western investors. The IPO is a major step for Emaar in raising the money to build its super-sized shopping center, the Mall of the World. This immense project with the state backing focuses attention on the strength of recovery after the financial crisis in 2009, but also raises the question, could history repeat itself?
An encouraging debut for an ambitious project. The United Arab Emirates' biggest listed developer, Emaar Properties, opened its retail division, Emmar Malls, to share trading and enjoyed a first-day gain of 12%. This is the first step towards funding the Mall of the World, which will cover an area of 4.5 million metres squared. The estimated cost is some €5.4 billion. Work started in July on the mall, one of the largest construction projects in the world. It will effectively be a climate-controlled city within a city and will be even bigger than Emmar's Dubai Mall, the most visited shopping complex on the planet. It was the largest IPO of its kind in the Emirates since the global financial crisis and raised €1.25 billion.
I think we've gone through a period where the market has been growing unsustainably quickly, and now we're moving into a period where it's starting to stabilise, and that's a good thing for the overall market. So you've got confidence from investors, you've certainly got more confidence from developers.
There are signs that the Mall of the World could help stimulate demand among investors in Europe, the United States and Asia.
To shed more light on all of this, joining us is Nuruddin Al-Hammoury, Chief Market Strategist at 80 East Securities in Abu Dhabi. So, Nuruddin, we've seen an optimistic atmosphere surrounding the Emaar Malls IPO. What does this mean for the UAE's economy?
Yeah, well, basically, as you mentioned in your story, the confidence is back, and this is the key not only for the Euro or not only for the UAE, it is for the region as a whole. The economy is expanding within a moderate and encouraging rates so far. Businesses are also expanding ahead of the major event on the longer term in the UAE, which is the 2020 Expo. As far as the confidence remains, more and more business opportunities will be open, and the Emaar IPOs or Emaar Malls IPO and the significant demand that we have seen is just one of many evidences.
But Noor, some analysts have warned that Dubai risks repeating the same mistake of racing ahead with too much construction, which was one of the factors behind the debt crisis in 2009. Is there a danger of that?
So far, there is no internal risk. At least there is no internal risk. Dubai is expanding moderately with studied steps, and of course, they have learned from the past. However, the risk is external as always. The slowing down in Europe and Asia, in addition to the uncertainty of the U.S. economy, should keep the eyes open on these risks.
So with the continued political tensions in the Middle East, how do you evaluate the stability of Gulf stock markets compared to other markets in Europe and the U.S.?
Well, starting from Dubai and Abu Dhabi, at least in the summer, there were a notable sell-off due to the geopolitical tensions and the situation in Arab tech. However, the market recovered more than 90% of these losses. If you looked at Europe, Asia, and the US, these markets are suffering lately, which could be the short-term correction that everyone is waiting for. The ECB decision last week shows that the situation in Europe, at least, is even worse than the ECB thought, while the slowing down in Asia is also worrying. Therefore, the region will always be, again, a potential for new opportunities.
Thank you, Noor, for being with us.
Thank you so much for having me.
Well, that's all for this week. Don't forget, you can join us on Euronews Facebook page to share your thoughts on what we've talked about in this edition of Business Middle East. Thank you for watching. See you next week.